Hey, it's Jack. Wednesday. Can you believe it? We're already in July. The first half of the year is over. Now, we had a short week this week because yesterday, the 4th, the market was closed. So we just had a little bit of action on Monday, not much. And that's because when the market's closed, no one wants to do a little carryover on that day. So today is like the official day for the first day of the second half of the year. And what's going to happen is we're going to see a little bit of bouncing around in the broad market. And we'll probably see a push higher in the few stocks that have led the indexes higher. That's like 7 stocks, which makes the index look more bullish than it actually is. Because right now, you've got the S&P, SPY. You can look at that in the chart setup that I told you about. You can see that's bullish. QQQ, that's tech heavy, that's bullish. And DIA, mostly industrial, and that's a little bit bullish. But again, it's just like 7 stocks that are pushing the indexes higher. And that's not a good thing because what we want to see is depth across the board, stocks moving up, not just a couple members of the S&P 500 pushing the whole thing higher, like Tesla, for example. Now, hedge funds and institutions, they're kind of like starting on a clean slate for the back half of this year. And what they have a gain in, they want to get a bigger gain in. So you're probably going to see another push higher in a lot of the stocks that are already high. What we're also seeing, which is kind of interesting, is today when I'm looking at it, we got new highs in airlines, Delta Airlines, and one other one skips my mind. And that's kind of a good sign for travel, the economy, consumer, stuff like that. But what's going to also happen now is in this second half, especially starting this week, is these option prices, as I keep telling you, they're so sky high, it's unbelievable. Now, you don't need to believe me. If you don't believe me, I totally get it. Everybody's always talking stuff in videos, right? But here's how you can just prove it to yourself without even taking my word for it. Just pull up any stock you want. Pull up NVIDIA, for example, and look 30 to 40 days out at what a call price is priced at. And then take that price, divide it by the stock price. That'll give you your yield on that. And you'll see it's extremely high in a lot of these stocks that are leading the charge. Tesla, NVIDIA, CMG, stuff like that. Real high. And then on the other stuff that a lot of these institutions are hoping or expecting to move, they're also going to see option premiums increase because now in this market, a lot of hedge funds and institutions would rather just buy some options rather than buy the stock because they're not 100% convinced that the broad market has continued to go up, but they have a fear of missing out. So rather than buying the underlying stock, they might buy a little bit of that, but they're going to take a bigger position in the calls. And that's going to push premiums up, which is why we still want to be an option seller. That's what I'm doing. Starting today, I just put out another good one, so check it out. Did it with my own money every week, like I tell you. Every Tuesday I put this on, but it even works in a short week, like this week. We got 2 days left until these options expire, and if they expire worthless, we keep 100% of the profit. How beautiful is that? Almost as beautiful as this scenery behind me.